What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm gonna be doing an update on PLTR ticker. And on today's video, first of all, I will show you where we are on a price chart and how we get there. Then we'll continue with the fundamental news and I will show you why ARK Invest sold shares of Palantir, and I will show you that a lot of analysts are buying the Palantir stock despite of their negative forecast. And at the end of this video, I will share my thoughts and my technical analysis, and I will show you what should we expect next. And before we get into all of that, if you guys would like to earn 2 free stocks with Moomoo valued up to $7,000, please check out that link in the description below. All you have to do is sign up for an account and deposit as little as $1. This is guaranteed free money. Full details you can see on the screen right now. So let's start with the price chart. I made my previous video right here at this very point when we were at the price point of roughly $10.5 or $10.6, and I've told you that we don't have enough confirmation of the next leg to the upside. That's why I didn't encourage you to enter your long position, a long swing trade position. But from the fundamental standpoint, from the investor's standpoint, this asset was and is extremely attractive, and I've told you that you should accumulate your position all the way down because the range is below I guess $15 is a very good levels where you can buy this stock. And let me show you some fundamental news related to this company. And first of all, we have some explanation why ARK Invest closed its position in Palantir. And we are on YouTube, and this interview was made by Meet Kevin. And as you can see, he interviewed Brett Winton, and he is an analyst from ARK Invest. And let me show you this.
This one's coming. Palantir, what happened?
Sure. I mean, like I described, as we're in risk-off periods, we tend to consolidate the portfolios. And so, we had some concerns about their competitive positioning within the government space, and we had better risk money elsewhere. And so it's not, when you're making a decision to consolidate a portfolio, it's not like those are easy decisions, but you look at kind of like the risk return profile for all of your positions and say what's lowest on the stack rank relative to something else that we think has comparable upside.
That makes sense. So in risk off periods, to make this simple, basically when prices are going down, narrow into the ones maybe you have the most conviction in. That's what you're saying?
Exactly. Yeah. Okay. Yeah.
So, as you can see, I think it is a quite weak explanation, and definitely it's totally okay to rebalance the portfolio of some of your assets. But the main idea right here is that they have not so much growth in their government space. But let me show you their official Q4 results. You can see that the growth was 26%. And the full year 2021 results has 47% of revenue growth in government sector. On top of that, let me show you on page 19 right here, you can see that the government revenue growth quarter by quarter is declining. And yes, it might be one of the reasons, but 26% from the government contracts that you've already covered the majority of your clients in the United States, and the majority of their government contracts are from the United States. So if you already have the majority of customers of your total addressable market, you cannot have huge numbers right here. On top of that, this company is moving forward to their commercial sector, and definitely, let me show you right here. As you can see, their commercial revenue growth is 34%, with the GAAP gross margin of 78%. And their Q4 results is even more impressive. It is a 47% with the GAAP gross margin of 80%. So I think the main reason is the outflow of the capital. And I've showed you this in my previous video. You can find the link in the description below and on your top right corner. But on top of this information, I want to show you another article that was published on Investor Place, and it says, do not ignore these red flags with Palantir Technologies. And some of these red flags are their weak financials. And right here, as you can see, one of the reasons is that Palantir is still unprofitable. But let me show you right here again. operating income while investing in growth. As you can see, they have an operating margin on GAAP basis of negative 14%. But if you exclude the SBC stock-based compensation and related employer taxes, they will have 29% of operational income. So technically, this company is operational because stock-based compensation is just a number in their balance sheet and it is not the real losses. Definitely, I think it is not the red flag. On top of that, let me show you right here on MarketBeat, we have the analyst ratings. And for example, right here on February 23rd, Citigroup reduced the price target of Palantir from $13 to $10. And on top of that, let me show you that Royal Bank of Canada on February 17th also reduced its price target from $15 to $9. And let me show you the institutional investors list. On February the 10th, Citigroup added to their long position more than 226% of new Palantir stocks, and their position is $59.9 million. On top of that, they increased their long position with call option for more than a half. And definitely it doesn't make sense, because if you divide the value of their position by number of shares, you will have the average price of $18.2. And why in the world they set the price target of $10 exactly at the same date and didn't sell any of Palantir shares? It's quite suspicious. On top of that, let me show you the Royal Canadian Bank. Royal Bank of Canada. As you can see, they have the same position with their put option, but right here they increased their position by 5.5, almost 5.5%, and for now they own about $46.1 million in value in Palantir stock. And again, their position, if you divide the value of their shares by number of stocks, their position is $18.2 per share. And their price target is $9 per share. So why in the world they increase their position at the same time lowering their price target? It doesn't make sense. This means I think you should rely only on your own fundamental analysis, and you should decide whether or not this company is worth your attention. So, and let's continue with the technical analysis, but before we dive deep right here, please subscribe to my channel, hit notification bell and hit the like button. This helps me a lot. So guys, I don't want to dive deep into the technical analysis right now, because from the investor standpoint, this asset is still very attractive. We have very good bounce to the upside from the ranges of roughly $9.5. And from the swing traders standpoint, this asset is still very risky, because we don't have confirmation of new uptrend. We should exceed the previous swing high, and it is the range of roughly $14.22. So if you are risky enough and if you tolerate for about 22% of or about 20% of potential stop loss, definitely you can add your position right here. But as for me, I suggest you to invest in this asset only and stay aside from any swing trade positions. So I think from the technical standpoint, that's it for now. If you like my video, please hit the like button and subscribe to my channel with notification bell. And see you guys and girls next time. Bye!